So back to the tax plan, one of the things we spoke about a couple weeks ago is we were encouraging people that had lived in their home 2 out of the last 5 years to consider selling it, because at that point in the current tax plan, and that's why nothing really counts until it's all passed and signed by the president, but at that point the tax plan had a provision that said that you were not going to be able to keep the gains from a primary residence sale, capital gains free, unless you lived in a home 5 out of the last 8 years.
Which is crazy.
Which is crazy. The current is 2 out of 5. Well, the bill as it got revised and politicked and beat up, the 2 out of the last 5 stayed. So people that look, if you rushed to sell your home and it wasn't with us, call your agent. If you don't really want to, if you did it with us, we'll obviously work with you. But nonetheless, that is still there. So if you sell your home and you've occupied it as a primary residence in 2 out of the last 5 years and you have a gain, the provision about it being capital gains free, and there's all kinds of other restrictions. We're not an accountant, but that's the basic premise of it. It's still in there, so that's a good thing.
So basically it stays the way it was before.
Correct.
No change on that.
Correct. The mortgage interest deduction stayed. The difference is in the current bill, you were allowed to write off the interest on a mortgage of up to $1 million. That's been reduced to $750,000. So for 99% of the population that don't have a mortgage over $750,000, their mortgage interest deduction they keep.
And really in our market,
it's very rare. If someone's going to buy above that price range, they're usually financing. They're not financing, they're usually cash. So it's, again, majority of the population. The other provision that stayed in is the ability to deduct property taxes. However, that is capped at $10,000. So there are certainly people that have higher than $10,000 property taxes that don't get the deduction. But for the chief complaint from a lot of the industry lobbyists was that eliminating that would hurt the middle class. If you've got a property tax bill of more than $10,000, you're not in the middle class.
Right.
So the way that, and then of course if you're an upper income earner and you lose that deduction, you're gaining it back. You're gaining more money back with some of the other changes. So the one change is the 3.8% Obamacare kicker goes away. The penalty for not having health insurance goes away as well. So higher income earners had on certain types of income and investment income, paid an additional 3.8% tax on that income. So that is gone. And then the brackets changed. So the top bracket went from 39.6 to 37. And then basically everywhere across the board, the brackets are lower. One interesting part of it that was a real concern for the real estate industry was there was a provision at one point that and the corporate tax rate went from 35 to 21. There was a lot of discussion through the campaign about pass-through entities, which are LLCs, S corps that are taxed a certain way where the income simply passes through to the owners, and they're really more of a liability protection than anything else. But nonetheless, there was a lot of discussion about whether those would receive the same treatment as corporations, as like C corps. And so at one point, it looked like they were going to get the same treatment, and then another point, they weren't going to get it. And then what ended up happening in the last iterations of the bill was a change that allowed a 20% deduction of 20% deduction of the income, reduction of income, so to speak. There is language in there about certain service providers not being considered part of that. So there was a debate about whether or not real estate agents would be in the group of service providers or not. And the National Association of Realtors this week came out and said that they're not. So real estate agents will get the benefits. So a lot of people in the real estate industry are excited about it. There's certainly some concern over the anti-real estate purchasing type things that are in place that people think could hurt home values. I don't think they will, because people will have more income. So I don't think it's going to hurt the real estate market per se. People will have more income to spend. And the other part of it, which is I guess not really a surprise to me, Mr. Trump is, President Trump is clearly a real estate investor and developer, and there's some pretty nice provisions in there for corporate real estate owners and for people that own real estate. So I think that will encourage more and more reinvestment into real estate by the wealthy and by people that have put their money in other places. So nonetheless, overall, in my opinion, for the real estate market, the tax plan will be pretty effective and helpful.
There was panic at one point, but
There was.
I'm glad that
Yeah, there
a
was
lot of the
panic. There was
context-
panic because at one point we thought the real estate industry was going to get hurt by some of the provisions. There was panic about a lot of stuff getting nixed. I think at one point people thought the brackets were going to go a little bit lower, like the top bracket was going to go from 39.6 to 35, but it ended up being at 37. So overall, though, I read some nonpartisan discussion online, and the majority of people are going to have more income for the next several years. Some of it phases out, and there's some people saying, oh, well, by 2025, this group of people is going to get harmed by it. It's like there's a lot that can change between now and 2025. I mean, who knows if this is going to even be in existence or if not modified. That's 8 years away. Like, there's so much that'll change between now and then as to whether or not, so if we're making decisions about what the plan does in 2025, let's just shelve that until a little bit closer to that time. A lot will change between now and then. So for the next several years, there's no doubt that people will have a little bit more money in their pockets, and hopefully that helps continue the economic growth that we've been experiencing.
Yeah, I mean, they want to do anything to not hurt the real estate market. I mean, as we saw in the Great Recession, the real estate market is responsible for so many jobs and so much of our economy, more so than I ever realized. You go down the line all the way to construction workers, contractors. I mean, so much stuff is touched by real estate. For them to hurt real estate anyway, I don't think that they ever really want to do that, especially with investments. And
I'm a firm believer that there's going to be a lot of corporations, and I've already seen a handful this week that have come out with the releases that they're giving raises and more benefits and different things because of the relief. And as a business owner myself, I know that played a role. The expectation of this passing played a role in decisions we've made in the past few months. That I have no doubt there's more and more business owners that are going to do that. They're going to help wages grow and more economic development.
You're rolling this into your bonus discussion.
There we go. Yes,
you're rolling us into.
There's no doubt that it plays a role. I mean, if it frees up income, I think business owners are naturally going to invest more. They're going to invest more into their business. It's just the reality of it. So if you were concerned about those things going away, that for the most part, for most consumers, the main real estate protections are still there. There's some caps and changes here and there, but the reality is that the majority of the people listening to this will not see any negative impact from a real estate perspective, or property taxes, or mortgage interest deduction, or capital gains free selling primary residences. So that's certainly good news. And I think what'll be interesting or appealing is to see if it helps promote an earlier surge in our real estate market. We tend to believe that real estate is very emotional, and I think this tax plan has kind of been lingering and hanging over people's heads for a while. Some people are waiting to see what happens before they decide. Our real estate market tends to really, the spring is when it really starts to turn the corner and pick up. It'll be interesting to see if all of this good economic data, the stock market, the tax reform plan, if good numbers come out for holiday spending and the GDP and all those things continue to show good consumer confidence, I start to feel more and more inclined to say that I think the surge in our real estate market is going to start earlier rather than sooner this year because of all that. But it remains to be seen. There's still a lot of data that will come out on it, but I think there's a good chance that that'll be the case. When we're normally used to seeing that March and April surge, I wouldn't be surprised if it shows up in February this year. I'll be certainly happy if it does.
That'll be exciting.
Yeah.